Let's get across the market open now. Jonathan Takadena joining us from MPC Markets. Jonathan, welcome to Wednesday as we, of course, look back at yesterday's session, a new record high.
Yes.
Looks as though we're going to open low. What would your positioning be right now then?
Okay, so I remember last week, I thought there was an easy call saying that the markets would make record highs this week, and we got that yesterday. And then, kind of like last night was the first bit of reaction to good news where the market hasn't reacted positively. So we had reporting last night, and the market sold off on that, and obviously we've had our first thing. So my positioning at the moment is I'm starting to see a little bit of caution. We've had a good run to new all-time highs, but I'm just starting to see a few anecdotes within, like, say, the real estate sector. There's a few, lower clearance rates. I've, just had some anecdotal evidence about some, properties not reaching new record highs and things like that. So I'm just saying that it's time to take a few profits here, especially in the banks. They've had a great run. I've been bullish most of this run up. I remember, being on the call saying that, let's buy some Westpac here at these levels. They've all recovered. Macquarie's made it up to new record highs. So if you've enjoyed this run, I think it's time to take some partial profits and reduce some risk here.
All right. So you talk about taking profits in the banks there. Now, of course, Commonwealth Bank has its AGM today. Mm-hmm. So that would include profits there because, in fact, I was trying to work out who I was speaking to last week. They were saying that if they're buying banks, then CBA is still the preferred one, but that's where they want to be.
Yeah, well, so how I've sort of played the markets is that whatever's been the market darling just tends to keep being the market darling, and obviously Commonwealth Bank's been the main leader in this push here. If I wanted to stay long, I would stay long Commonwealth Bank out of the Big Four, even though Macquarie has been my preferred choice and it's had made record highs yesterday as well. So, but either way, the view remains. I haven't looked into what they're going to talk about into the AGM, but just generally, 3 weeks after the election in the US, if you look at the betting markets, Donald Trump has started to firm a little bit here, and we got it's been a real circus show and it's been a real roller coaster so far. So, as I said, 3 weeks out, we've reached record highs. Time to trim some profits. If the markets keep zooming on here and you miss out a little bit, you can always jump back in. But I just see a few signs where I should be a little bit cautious here.
Gee, I think you'd be brave to take a bet on the US election at this point. It's 3 weeks out. Jonathan, now in the resources sector, Rio Tinto out with its quarterly update, actually missing on its exports.
Yeah, so that could be just a factor of the China slowdown. So obviously before China stimulated, all the resources were down to the lows, and obviously China came in with that huge stimulus package. The market reacted positively, but it hasn't been able to continue on. Like, obviously the bounce has been enormous. I believe it's something like 30 to 35% from the lows on the Chinese index. So that's a massive move for an index itself, and it's kind of consolidating at these levels now. So we're starting to see the same price action in Rio and BHP here. So I'm cautious on those two as well. If they start to roll over, I would trim and look to get to the sidelines.
All right. Of course, I guess the most recent news from Rio with its play in the lithium space for Arcadium is seeing that as a positive, though, overall?
Yeah, absolutely. So that's more of a separate topic. Lithium just got beaten down so much more to the point where no one wanted any lithium stocks at all. I mean, like the one that I follow most, Liontown, got down to 60 odd cents. That's quite a beating. And then they came into production. But then what we saw was that basically, Liontown had their first production, sold off a spot at a premium. So I think Rio were quite tactile in buying these assets at these low prices. It was still a great project there, and it's kind of a more where we're buying at the lows here, and it's sort of thinking longer term just for that commodity itself.
So in terms of copper, how are you viewing that at the moment then, and I guess with those copper assets, particularly, well, I guess you got the big miners with a stake there, but also you got the pure copper plays such as Sandfire.
Yeah, so copper Copper and oil are playing the sort of the global slowdown at the moment. So we're seeing oil prices have a massive move, and then as soon as there's no disruptions in the Middle East, we start seeing a pullback here. So I see oil almost just above that $70 level. That's kind of like a nice support level. If it breaks below that, it just shows that the war's slowing down. Same thing with copper. So gold and silver have maintained their highs, while copper has seen more industrial and it's fallen back here. So the way I see it is that some things like Sandfire, even some of the smaller copper miners have had a great runs here, and I'd be cautious on those here. Like if you've ridden this nice push higher, time to take some profits here.
Now you mentioned the gold miners there. Are you still very optimistic in that sector, I guess, given perhaps their underperformance relative to the spot gold price?
Yeah, absolutely. So what we've seen over the last few weeks is that spot gold's had a nice run, hit about 2,700 from memory on the futures price, did dip back down, and then it's settling around here around that 2,650 level on the spot. But the miners have been lagging all this time, and what we see now is that a good catch up. So now we're seeing the larger miners, Northern Star, Newmont, all at new highs, all the second tier ones, Bellevue, Regis, all pushing on higher. Even some of the small ones that I've been following, like Catalyst, Emerald, and Pantoro, all pushing up and having constructive charts. So I think what we'll see is that the miners should continue here, pushing on higher. If they slow down and the spot price can't push onto new highs, then I'd start to signal a bit of caution. But I just think that
But what is in terms of what you start trimming, would you?
Yeah. So, what you want to see is that if the miners start slowing down and the spot can't push onto new high prices, then we kind of reach the resistance level here. But we haven't seen that today.
Yeah.
But that's kind of what I'm looking out for.
So does that mean, obviously you've talked about how the big and mid-tier miners are moving. Are you happy to be then in the explorers and developers? Is that?
Yeah, absolutely.
Yeah.
So generally when a whole sort of commodity is moving, the blue chip names move first. So obviously the larger names, the larger producers move first. But then what happens is that that if the mid-tier and the lower tier start moving as well, then the whole sector is moving, and you get more bang for your buck out of the smaller ones. So it's not a space to play for all the regular investors, but obviously here in Australia we love our rocks, we love our junior miners, we love our 10-cent stocks and below. So yeah, I do like playing in that space here. But what you'll see as well is that it happens in reverse the other way. So the junior miners, the producers, and the sort of the explorers, they'll slow down first. Then the mid tiers will slow down. Then the bigger names will slow down. If the whole commodity space. So we've enjoyed a nice run where even the smaller miners have gotten some love. But if they start slowing down, that's kind of like what I'm looking. That's a kind of a sign that I'm looking for. That maybe this nice push has maybe exhausted here.